Right, welcome to this last session. I'm literally holding you back from catching your last train or executive jet back across the pond. So my name's Jonny Fry. I recognise a number of faces, and it's good to see some new people. And what I find particularly interesting is the way the market is evolving. Some of you, I remember sitting here 2017, this very room, and we were talking about blockchains and digital assets. And we were talking about the Information Commission Officer. Well, we weren't. We were talking about ICOs. And we've evolved and come a long way from that. And I think whilst it's a really, really boring title, the regulatory outlook, because the bottom answer is actually, it's not great. That's the honest answer. And that's holding back innovation. It's driving companies overseas. And that's just in the UK. I chaired a whole session for the Dutch National Bank on one day this week. Their obsession is the Germans and the Luxembourgians, who live in Luxembourg obviously, are pulling away from us because they've changed their law, they've changed the regulations, they're giving clarity. So it's a shame, but then having said that, look what's happened in the last couple of weeks. And I think of major note is what Andrew Bailey, the governor of the Bank of England, has pretty much done a flip. And then you follow that up with what's going on in the press in terms of what Visa are doing. You've probably all seen the announcement about Coinbase and what's that company called? Oh, MasterCard. They're also trying to jump in on the action. So I suppose we've got a really great panel here of people with different experience. But the main thing I would like to really ask you to focus on is not the crypto word. And the reason for that is, as some of you know, I call it a rounding error. It's about 4 trillion. And actually the much bigger opportunity, and I think a much bigger opportunity for Merkle and Riggs, we were talking about it earlier on, is actually what everyone calls real world assets. I would forget real world assets, just look at the derivative market. It's 1.2 quadrillion. And we've got a few Americans in the offing, so I can't resist it. If you're American, put your hand up, please. Right. How many zeros in a quadrillion? How many zeros asked? 12. 12? 18? So you can't even agree amongst yourselves. We think it's 24. Now, the reason I mention that is we used to argue about trillions and billions, but it's a lot of noughts. And so when we talk about 4 trillion as opposed to 1.2 quadrillion, and then stick in the funds and the bonds and real estate, and I'm just going to completely ignore data and information, talking to Shell what they're doing in Amsterdam, just staggering how they're using the technology. But the biggest tokenizer in the world is which company, before I start the panel?
BlackRock?
Nope. You all have one in your wallet or your purse or your phone, I suspect. Visa. Everything you do, they're tokenized. So this isn't new technology, but we are going to have to learn how to control and manage our exposure to this. And that's what, obviously, Merkle, and that's the whole object of today, is to start thinking and taking, unfortunately, responsibility. So what I'd like to do is, first of all, you've heard from Riggs. Sean, can you kick off and we'll go across the panel and explain who you are and where you come from, please?
Great. Always a pleasure, Jonny. And great to be at CMS and with Merkle. Thank you for having us. My name is Sean Kiernan. I'm the CEO and founder of Greengage. We're a fintech that offers crypto-friendly accounts and a wholesale private credit and yield platform. And our flagship product is Bitcoin Backlens.
Thanks very much.
Hi everyone, my name is Kiew-Smith. I'm the head of legal and compliance for Galaxy in EMEA. I come from a regulator and banking background. But very pleased to be here. Thank you.
Come on, Professor, tell us where. And have you got the violin case with the machine gun in? Because you come from Italy, clearly.
Well, born in Italy, but then in the UK for more than 20 years now. So, yes, I'm also an academic, LSE, City University in Bocconi, but also CEO, head of research at Rosa and Roubini. His is misspelled. This is the famous Nuri Roubini, which is a macroeconomic consultancy. But then after writing this book, Smart Money, which of course I'm unashamedly...
No adverts, come on.
Exactly. Unashamedly advertising. We actually decided to pivot a bit more towards digital asset. That's why I'm here. And also policy advisor. I've been at the Bank of England for a few years. Still got some friends, as you can imagine, there. That I like to think I advise.
Thank you.
All right. Yeah, I think most of the audience now knows me. So I'm Mriganka, one of the co-founders and the CEO of Merkle Science. Before Merkle Science, I had actually worked at a crypto exchange called Luno. So, and that was back when they were a very small team, like just 15 people across Singapore and Africa. And that's where I saw firsthand the impact crypto could have. Even with the stablecoins narrative, Africa and LATAM seem to have the most adoption, but you saw that with Bitcoin back in 2016. And of course, even back then, you'd see a lot of hacks and scams, and that was the driver for starting Merkle Science. So we first started in Singapore, where we were based, and then expanded to London and then the US. So New York is our new headquarters.
Okay, thanks so much. Right, what I'd like to do, Sean, I'd like to kick off with you and this whole sort of thorny topic of what on earth is going on with stablecoins. And the reason I'm interested is, according to McKinsey, $3.27 trillion worth of revenue will be generated from payments. 3.27 trillion globally. 48% of that will be out of Asia. And I think that helps to explain what the huge growth in fintechs, and I suppose arguably you're a fintech, because there's a lot of money you're chasing. But what's happening here in the UK?
So I think broadly, stablecoins are the killer app, if you will, for getting real-world assets on chain. About 2% of global dollar flows today happen on stablecoin rails, which is phenomenal. I mean, this is I couldn't have imagined when you and I were starting in this space a couple of years ago that this would have happened. And it really is an unlock for getting other assets on chain. If you have a client who has a wallet, it's much easier for them to look at private credit or other tokenized assets because they're more sensitized to this. And we've seen that with our clients. They're choosing with their feet to use stablecoins because it solves a lot of the frictions. For example, cross-border payments, particularly emerging market. You have resolution. I think most of us know how people are choosing to save their time and say credit risks or counterparty risk exposure. The UK is in a really interesting place right now because if we look at stablecoins, they're all dollar and maybe a bit of euro, kind of a dash over there, but really nothing happening in sterling denominated stablecoins as yet. And there's a few systemic issues around that, largely I think for the UK as a financial center, but also for the status of the reserve currency of pound sterling. If in future the US government enjoys a huge premium by having the stablecoins purchase gilts in US treasuries and not in gilts as in our version of them, that means that there's more cost for other countries that are not dollar denominated to fund their credit, which means higher cost of growth, essentially. Where the UK sits right now, I think is very much helped by the US-UK tech partnership that was announced. So the likes of Scott Besson and Rachel Reeves are carving new paths to see where we could collaborate. And I was equally remarking that the comments by Andrew Bailey were slightly volte-face versus what he'd been saying previously. And there were some rumors about still having some stablecoin limits imposed on individuals and businesses here in the UK, which I think a lot of the industry bodies are really hoping do not come into play for a whole host of reasons, because that could limit innovation across the board. That's a very long answer, so sorry.
Okay, thanks so much. Prof, you reckon the only place to go is UAE? So you're going to sort of take pasta to the sand?
Okay. Yeah, I mean, here there's a bit of a battle for the best jurisdiction, right? And in my view, I start from the perspective that a complete system, safe, but also efficient, is the one in which you have all three layers: CBDCs, stablecoins, and crypto. And CBDCs are kind of the foundation of trust in the digital currency space. Maybe because I'm a former central banker, as you wish, I think eventually trust is an important element when we talk about money. And I know that most of the revolution somehow about crypto was building a trustless economy, trustless currencies. I mean, eventually, if you read the history, you always start decentralized and eventually you re-centralize. I think it's going to be the case also. in this occasion. Plus, each of them, CBDCs, stablecoins, crypto, they all play different functions, and so they can perfectly coexist. And I think choosing one versus the other is not a great framework. So the US has chosen stablecoins and crypto versus CBDC, which is actually banned. The Eurozone has chosen CBDC versus stablecoins and crypto, and so has China, which has actually banned crypto. So all these systems are incomplete. Somehow only the UAE, in my view, with VARA and their regulations, have got the kind of system right. They got the CBDC, the digital dirham, and then they have a very favorable legislation on stablecoins, as good as genius. And you can still trade with crypto, which is important because it's a speculative asset. You want people to have something to speculate with. You don't want them to go and test the pegs that effectively are the stable coins. I mean, maybe because I'm an economist, yes, old school, we all know that pegs eventually collapse because you test them and eventually, one fail and then all the others fail because you lose trust in the system and so on and so forth, right? So you don't want people to go and try to test whether not today's stable coins, but tomorrow's stable coins, when there are going to be many of them, also issued by non-financial corporations, are good enough. So leave the cryptos alone. So somehow you need all these three elements at the same time, and tokenized deposits and so on and so forth, right? Somehow the UAE, I think, got this right. Other jurisdictions were learning by doing. The US will probably introduce some form of synthetic CBDCs by allowing stable coins to hold their reserves at the central bank with the master account at the Fed, which the systemic stable coins are already asking for.
Not going to do that. They're not going to do that.
We'll see.
Why? Why won't they do that? Come on.
Well,
if you put your money in the Fed,
it
has no impact on bond yields. This is all about driving interest rates down. He's got to refinance 17 trillion the next 3 years.
Is one of the elements.
Look, it's all about King Trump. You know that.
I'm gonna be in DC on Monday speaking with the Treasury exactly about this thing. So let's keep the possibility open.
Okay. Well, I'm interested. Unfortunately, again, we've lapsed into good old crypto again. It's speculative. It's a volatile asset. Yet Luxembourg are talking about putting 1% of their sovereign wealth fund now in Bitcoin. The most profitable product for the biggest asset manager in the world is the Bitcoin ETF. So I'm going to be interested coming back in 2 or 3 years' time, and will people still be talking about the same thing in terms of the volatility of some of these cryptocurrencies? But we'll move on. I'm interested, Chris, your point of view. You see quite a global scale of different businesses. What's your thought when it comes to in terms of arbitrage, almost regulatory arbitrage between some of these jurisdictions? Is it real or is it just talked about?
It's certainly real. Right. There are certainly some jurisdictions where it is easy to get a license. It's easier to run a business than others. And I would say there is a scale of, I would say, down the one end, the UK is probably as proposed, is going to be one of the most regulated jurisdictions when it comes to crypto, given all the consultation papers and discussion papers they've released over the last 2 years or so. I think that in Europe, MiCA is probably a bit more proportionate, although still quite heavyweight. I always say that MiCA is a bit like if MiFID II and PSD2 had a baby, right? I feel that kind of comes from the fact that Bitcoin started off as a currency and a payments mechanism, but then became an investable asset over time. So they've had to come up with this, hybrid or Frankenstein's monster, depending on how kind you're feeling on the day. Now, then we have the UAE and the US. I would put into the other side of the sliding scale, where they are actively trying to attract and grow crypto businesses and the adoption of blockchain technology. And that's worked very successfully for certain jurisdictions in the UAE, right? Notably Dubai, also ADGM. Bahrain has their own framework as well, obviously, right? And I feel like philosophically, those two buckets, if you like, are coming out from different angles. EU and UK grounded very much in MiFID, which is to control and regulate as any other asset class, which I think has its advantages. And then US and the likes of UAE, on the other hand, which are much more kind of pro-commercial growth.
Okay, Riggs, you've moved from Asia to the Big Apple. I assume it's because of things like the proposed clarity bill, like Genius. It's a more, you've got better regulatory clarity there. Are you seeing that with your clients in terms of some the more institutional clients now looking to embrace it in the States because of that clarity?
Yeah, I think so. We cater to like two key segments, right? Crypto natives and then law enforcement agencies. So back when we moved to the US, we noticed law enforcement was a lot more active in the space. There were a lot of recoveries, but the landscape's changed completely right now. Back then, there was a big crash in crypto. The most successful entrepreneur when I moved to the US, when I moved to New York, there were like posters all over in New York as well as DC of Sam Bankman-Fried. And that's when we saw the FTX crash, right? But now there's been a reversal where I think the crypto sector in the US is the strongest. And again, the Genius Act provides a lot of clarity to stablecoins. But I think everything Trump's doing, again, I'm not a political person. Trump may not be great for the world, but he's great for crypto. So I think launching a meme coin, pushing a very pro-crypto regime, pushes every single regulator to start looking at it, right? To the extreme where, like, I've seen every crypto entrepreneur moving from Asia and Europe to the US in just the last, like, 2 years, right? And typically they choose New York. Again, Genius Act lays, like, a very comprehensive framework for stablecoins, liquidity requirements. Even for non-US issuers, there is a framework. But beyond that, even for the other fringes, I think in the US, every company is risk on and like keen to innovate and grow. So that's where you see like a lot of movement moving all the way to the US right now.
Okay, going to have to ask you about your Cold War too. What's all that about then?
Yes, well, thank you very much. There's a global competition between US and China, right? And has many dimensions. Definitely a trade war. Every day we see news about that. A tech war and a disruption of global supply chains. In the tech war, there are many dimensions. The war on chips, semiconductors, right? So on quantum, on cyber warfare, on AI, on regulation, right? RegTech. And one of these dimensions is, I think, digital currencies. Because it's inevitable. Power always leads to the creation of a new monetary regime. A shift in power has always created a new monetary regime with kind of almost precise intervals. We were discussing before with David, almost every 80, 100 years, and we are coming up to that. The last one was invented in Bretton Woods, initially partly dismantled in 1971, when Nixon decided to de-anchor the dollar from gold. And now, and so it was re-anchored by a fiscal anchor. And now, maybe also this fiscal anchor is gone, and so we are looking for something new. Will it be eventually the new gold, the digital gold such as Bitcoin? Potentially, I mean, the creation of a Bitcoin strategic reserve may be going in that direction. In fact, before you mentioned crypto and volatility, definitely Bitcoin has been extremely volatile, but now that has been, in my view, institutionalized, volatility is going to be reduced.
Prof, you need to answer the question.
Yes.
Cold War II.
But this is exactly the answer in the sense that of these many dimensions of the competition between US and China, which we call Cold War II, because it's like a new Cold War between the superpower, US, and which is the incumbent, and the rising power that China has these so many dimensions. Will somebody fear that eventually this Cold War will end up in a hot war? Graham Allison asked himself in a book called Destined for War. US and China destined to fall in what he calls Thucydides' trap. Thucydides was the historian of the wars in the Peloponnesus between Athens and Sparta that, of course, ended up in a collision, in a military confrontation. Are they going to do that as well? Hopefully not, but definitely a Cold War is ongoing and will be raging, I think, for the next few decades.
And assume if people want to know more information, they can go and buy your book, or you're going to give them away, no doubt. Signed copies. There you go.
Signed copies that have been previously purchased.
Yeah, not digital ones. No, yeah, okay. Sean, you started the business here in the UK. You've migrated to the land of eternal sun, or the Middle East. You've got some experience of both, but you've always been, I've always thought, more at the edge of helping, if you like, traditional institutions into the sort of more digital world. Where do you see, some of the trends, some of the innovation coming through in the next sort of couple of years when we're talking about digital assets?
Yeah, so we're still a UK business, and I'm still based here.
You're always there.
I go to the Abu Dhabi office quite often, but it is interesting to see the approach, because it's essentially the same regulatory regime in a way. It's effectively a copy-paste of the FCA, but there's a mandate from the top that innovation will happen, so they interpret things differently. One of the reasons we have set up that office, to answer your question as well as us in Microcosm, stablecoins, I think, have opened up this new opportunity for people to think of wallets as IBANs and behave as if they're now in a new space. And it's not just the crypto native world, it's real businesses, and particularly with us, it's family offices we're seeing start to adopt for their activities, particularly the kids of the families like these. But the bit that opens up is the whole suite of services on top. So in our case, it was a private credit transaction that opened up the reason for us moving to Abu Dhabi to test with Coinbase a live movement in a smart contract-based settlement for a loan. And that, in my perspective, is one of these other areas that is the largest on-chain asset class. So you mentioned 4 trillion for crypto, private credit's 2 trillion, but it's only about 15 billion that's tokenized as such, but it's the second biggest after stablecoins. And part of the reason for that is there's lots of inefficiencies in private credit, particularly in the middle and back office settlement. It's still a bit old school, even if it's a lot of whizzy things in the front end. And the savings that we estimate you can achieve on that is, in the real world, about 0.5% in terms of costs. And that's a meaningful saving when you think of...
Well, when they issue 7 trillion a year of debt, 0.5% is a big number.
It's a big number, and that ultimately will go back to borrowers or lenders in the form of better spreads. So we think that's going to be another one. And there's a lot of innovation in DeFi in that space. And DeFi is also outside of the perimeter in the UK. Aave is based here, interestingly. So there's an opportunity for the UK to still play in certain bits, even if it's not fully clear.
Thank you. And Chris, again, from a sort of institutional point of view, where do you see the interest coming from in the sort of wider digital asset space?
So I think that, and I've looked at things this way for quite a while now, that we in the institutional markets, you're used to the traditional asset classes of commodities, credits, rates, equities, and digital assets is simply another pillar of that asset class group. And so you see the likes of Standard Chartered, for example, very famously getting into the custody space quite early on with the likes of Zodia. And then recently, press releases around offering spot crypto trading. And so you'll see a lot of the same services that the institutional market offers in respect of trading, in respect of custody, in respect of risk management, also being offered in respect of digital assets as well.
And when you say digital assets, do you mean crypto or do you mean tokenized other assets? Both.
Both, absolutely. Because from a legal and regulatory perspective, when you've tokenized a real asset, let's just say a private market fund, right? The regulator sees that as a private market fund, regardless of the rails on which it operates. But to our earlier discussion, stablecoins really are transformative, not just for real assets, but not just for payments, for everyday payments, but also in wholesale trading markets. Everyone's been trying to crack the tokenized securities nut for the best part of a decade, let's be honest, right? And the amount of conferences I've been to in the last decade around the promise of tokenization in securities trading, and I think the reason why it's just been talked about for 10 years rather than actually done is because trading works on the basis of delivery of the asset versus payment. And tokenized security solves for the delivery, but not for the payment limb of that journey. And so, if you can solve for that, whether it's it's a CBDC or a wholesale settlement token, or what have you. And then there are obviously various market infrastructure considerations if you're dealing in public market securities, like securities depositories and so on and so forth, which is, again, very tricky. But the payments leg of trading on-chain for tokenized assets is not to be underestimated in its significance.
Okay, yeah. Sorry, the reason I pulled a face is that actually you could argue we don't need stable coins in the UK if the banks just did what they were meant to do, i.e. be compliant with ISO 2022, because then you allow API transactions that could be then programmable payments. You don't need any of this other blockchain-related stuff, but the banks haven't done it, so guess what? Industry's innovated. I'm very conscious. It's getting dark. You've probably got to get home. Or under the bus shelter. Has anyone got any questions they would like to raise? Anything they agree or disagree? David, you're normally a controversial sort of nerd. What have you? Any comments?
Yeah, just one comment I'd like to say. When people mention the word stablecoin, and I've seen this everywhere, there's only one stablecoin. It's a U.S. stablecoin. That's it. So it's more of a euphemism. Trying to be nice.
And I know exactly where you're leading this conversation, so I'll help you along. Had lunch with a very, very senior regulator a couple of weeks ago. His words, not mine. We are seeing the dollarization of the UK economy. Thought that was a bit radical. Had exactly the same conversation with the Dutch Central Bank this week. Christian Lagarde has already come out and said we have to have a digital euro, because otherwise we're going to see. I know you're smiling because you're American, but we should have a choice of currencies around the world.
You could argue that trade finance is already dollarized, right? And so, why not the rest of?
Yeah, but bizarrely, we trade twice the number of dollars in London than they do in New York. We've got 38% of the FX flow here in London. New York's got 18%. And I think this goes to the crux of why we've got to sort out digital money, because the only reason we're here is because we're halfway between Asia and America. And they used to call trading sterling and, well, what was sterling versus dollars called?
Cable.
Why?
Because it was the information about the rate was going on under the ocean on a telegraph cable.
Yeah, it was basically but going on a cable underneath the Atlantic, so they called it cable. That's why they traded it. So the reason I mention that is that we could see that 38% of global FX. That's $7 trillion a day. It could be the Isle of Dogs. It could be the Maldives. It could be Auckland. It doesn't need to be anywhere anymore. These things are happening 24/7. And Riggs, as we were talking about with dark pools, hands up if you know what a dark pool is. Yep. Basically, it sounds dodgy, doesn't it? Dark pool. Why would you want to touch it? If we didn't have dark pools, the stock exchanges couldn't function. You used to have to go along to Bloomberg Tradebook. I think that was the first one. Some of you are more knowledgeable than I am on this topic, but you'd go along, so I've got 1 million Apple shares, and then Bloomberg would effectively sort out the transaction through their dark pools. Today's dark pools are DEXs. You shouldn't be scared of them. We need to embrace them. And I know, Riggs, you've got a few ideas how you might be able to do that. But the trouble is we've got this terminology. And the final one I'll leave you with, and you've seen lots of slides today. So I'd like you to put your hands up. Do you spell tokenization with a Z? No. Hands up. No. Right. Go home because you're wrong. It's bloody Americans, but we started it off. Talk to Professor Sarah Green, the previous Law Commission. She'll tell you we used to spell it with a Z. Look, there's that funny company the other day called BVNK. They've forgotten the A. Are we going to change all the banks with a V? So use Z, and I'm being absolutely serious here. You need to use Z because, as someone said, the bloody Americans, because they control the search engines. So if you spell securitization, tokenization, monetization with a Z, your social media post will get picked up more than with an S. So on that happy note, I'm going to leave you in the hands of our American host, Rig.
Thanks a lot. This was this was a nice concluding experience of British humor. So yeah, Johnny, lot to think about.
Lots of dad jokes. Sorry.
Yeah, lot to think about. But I think everyone's just about ready to go to sleep. So we have drinks and networking now. So thanks a lot for coming. And maybe we talk about the dollarization of the UK another time. And yeah, I think Ian from our team is going to wrap up now. Just a minute before you can all head to the networking session.